Warren Buffett's Berkshire Hathaway just pulled off a massive $9.7 billion cash acquisition, buying Occidental Petroleum's OxyChem business. On the surface, it looks like another large investment, but analysts are calling it a strategic masterstroke, and potentially the last major deal of Buffett's legendary career. The OxyChem business will operate as a standalone subsidiary, which means Berkshire isn't absorbing its operations into its other divisions. This allows Buffett to capture a steady, predictable cash flow without taking on unnecessary operational risks. At the same time, Occidental Petroleum plans to use the bulk of the sale proceeds to pay down its enormous debt, which has been weighing heavily on its stock and investor confidence for years. Doug Legate from Wolfe Research described the deal as completely self-serving, logical, and helpful, highlighting that this acquisition creates a win-win scenario for both companies. Berkshire strengthens its portfolio, Occidental stabilizes its finances, and OxyChem continues running as a profitable, independent operation. For Buffett, this isn't just another acquisition. It's a carefully calculated strategic move, showcasing his ability to identify opportunities where both sides gain, a hallmark of his investing philosophy. And with Buffett planning to retire at the end of December, this deal might be his final signature move, leaving a lasting impact on Berkshire Hathaway. Berkshire Hathaway isn't short on cash. In fact, the company is sitting on a staggering $350 billion, one of the largest corporate cash hoards in the world. But having cash isn't the same as finding meaningful investments that provide both security and strong long-term returns. That's where OxyChem comes in. OxyChem manufactures PVC resin, a critical material for piping, construction, medical equipment, and industrial applications. Its revenue moves mostly with the housing market, giving it predictable cycles that Berkshire can rely on. This aligns perfectly with Buffett's preference for low-risk, steady businesses that produce reliable cash flow over decades. Analysts suggest this could be Buffett's final major acquisition, carefully timed to reinforce Berkshire's portfolio while leaving his successor, Abel, with a strong and diversified foundation. For investors and observers, it's a rare glimpse into Buffett's endgame, locking in stable assets that generate long-term wealth without unnecessary risk. Berkshire already holds nearly 30% of Occidental Petroleum, making it a major stakeholder. By acquiring OxyChem, Buffett doesn't just gain a profitable chemicals subsidiary, he also indirectly strengthens his existing investment in Occidental. Occidental plans to use about $6.5 billion of the proceeds to reduce debt, bringing its total debt below $15 billion. That's critical after years of leveraged acquisitions, including the $12 billion Crown Rock deal in the Permian Basin, which stretched Occidental's balance sheet. This creates a strategic loop of benefits. Berkshire gains a reliable subsidiary, Occidental reduces financial risk, and OxyChem operates independently, generating steady revenue. Analysts describe this as a circular win-win, comparable to sectors like AI, where companies invest in one another and reinforce mutual growth. By structuring the deal this way, Buffett ensures that both his direct and indirect investments gain value, a move that exemplifies his long-term, multi-layered thinking in corporate strategy. OxyChem contributes over $1 billion in annual pre-tax income, nearly 20% of Occidental's total earnings. Its performance is relatively immune to volatile oil markets, and it benefits from trends in housing and infrastructure. For Berkshire, this is the ideal, low-volatility, high-return investment, the kind Buffett has famously favored throughout his career. Doug Legate notes that OxyChem's pricing power and niche market position make it a predictable and profitable addition to Berkshire's portfolio. Unlike riskier ventures that depend on market speculation, OxyChem produces consistent, reliable cash flow, exactly what Berkshire needs to balance its riskier holdings. In other words, this acquisition doesn't just add revenue, it creates financial stability, strengthens Berkshire's diversified holdings, and provides Abel with a solid, dependable foundation as he assumes leadership. The OxyChem deal is also symbolic. It's the first Berkshire announcement that features quotes from Greg Abel, the incoming CEO, signaling a smooth transition of leadership. Abel praised OxyChem as a robust portfolio of assets and commended Occidental CEO Vicky Holub for her strategic foresight. Although Buffett is retiring, his influence is unmistakable. Experts believe he shaped the strategy and timing, ensuring the acquisition aligns with Berkshire's conservative, value-driven approach. This deal isn't merely financial, it's legacy building. Buffett is securing a stable, profitable business for the future, reinforcing the principles of careful investing and risk management that have defined Berkshire Hathaway for decades. For Abel, this acquisition is a strong starting point, giving him control over a business that generates consistent returns while preserving the Buffett philosophy, long-term stability over short-term gain. Despite the strategic brilliance of the deal, the stock market's initial reaction was surprising. Occidental shares fell 7% on the day of the announcement, even though analysts were overwhelmingly positive. This sell-the-news effect occurred because investors had already priced in the deal. Some feared that Buffett buying parts of Occidental, rather than the whole company, reduced the possibility of a full takeover, causing temporary uncertainty. Still, experts emphasize that the long-term impact remains positive. Occidental reduces debt, Berkshire gains a stable, cash-generating subsidiary, and OxyChem continues operating independently. The market reaction is short-term noise, while the strategic value is long-term and substantial. The OxyChem acquisition is more than just a $9.7 billion transaction. It's a strategic, multi-layered masterstroke. Berkshire Hathaway secures a profitable, stable subsidiary, Occidental reduces its debt and strengthens its balance sheet, and Buffett's legacy as a master investor is further cemented. Analysts call it a double win: reliable revenue for Berkshire, reduced financial risk for Occidental, and long-term strategic positioning for both. For investors, it's a lesson in Buffett-style investing. Look for stability, understand the business deeply, and create outcomes where multiple parties benefit. Ultimately, the OxyChem deal might be Buffett's final genius move, a quiet but powerful reminder of why his strategy has stood the test of time. Even in retirement, his approach continues to shape the financial world, proving that long-term vision often beats short-term spectacle.